Okay, let's go through different sectors together. Starting with the pharmaceuticals, we had a very nice rally into July and mid-August. We were trading above the 20 and the 50-day moving average. But guess what happened this week? We broke underneath the 50 and the 20-day moving average. We had a resistance area here break out, became support right around here, and now we broke underneath support. This is your next level of support. It's testing it right now. So if it's able to hold, then that's good. But any failure, and we most likely will come back and see this area for pharmaceuticals. So nothing really bullish about pharmaceuticals right now. The biotechs more or less the same. We had a very nice run up. The biotechs are actually a little more bullish than the pharmaceuticals. We had a very nice straight run up, and now basically the money's already been made and people are rotating out of biotechs. Okay, so notice how we have a very large decline, as well as trading underneath the 20 and the 50-day moving average. We do have a level of support right around the 80 area, so if the decline continues, look for support around 80, but not until it gets above this level can we say we have a higher high. Right now I would say biotechs are more or less in some kind of consolidation or correction right now. Going into retail, retail is actually looking pretty bullish. We had a nice bottom here, rally, consolidation, rally, consolidation. What is that? Higher highs and higher lows. We had a resistance right here. We broke through it, came back, tested it with a hammer. And it's also notice how you see prices are trading above the 20 and the 50-day moving average. And notice how it's starting to separate. Okay, back here when we were trending down, notice how the 50, 20, and prices were fanning out. Okay, it's starting to separate. And you're kind of seeing the same action right here. Now, before you go start buying retail stocks, we are right underneath this resistance right here, okay, built back around this area. So 420 is a very critical resistance. If we are able to trade above here, then I would definitely be more bullish on the retails. Next, consumer discretionary. This is your Home Depot, your McDonald's, your Target. Looks very similar to the retail, higher highs, higher lows, but not as bullish, because we are right now trading in between this range right here. Okay, notice how it's consolidating. It wasn't able to break above it. If it's breaking above this area, we still have another level of resistance right here. Okay, so not until it's able to get above 34, then I would probably start looking towards this area or this sector. If we do get a breakdown underneath this wedge, look for support around 28. Consumer staples. This is your Coca-Cola, your Altria, your Anheuser-Busch, basically your Coke, your beer, and your cigarettes, right? All the good stuff. This sector is actually looking pretty bullish. We had a very nice impulsive uptrend. See, this is what you want to see in an uptrend, nice and smooth and strong. You want to see continuous buying pressure. This is consolidating right now. Okay, you want to see a consolidation, pull back to some kind of support, and support right now is around 28, and as well as the 50-day moving average. If we can break out of this pattern right here, then that's a pretty good signal, I would say, to get into this sector, especially if we can get above 29 right here, the previous high. Why? Because now we have a higher low, and this will become a new higher high. Energy. Well, we all know the story behind energy, right? It's funny how what was once loved is now hated. Okay, we are creating a series of lower lows and lower highs. All right, pull back to the 50-day moving average, and it failed to break above it. This is basically very bearish. Right? We keep creating lower lows and lower highs. So here's the thing: what was hot before is not anymore. Okay, so if you're holding on to energy stocks, ask yourself why. Because the money has already been made. Okay, you should have taken profit right here, if not at least around this area. Here, I don't know. It's more or less already kind of too late. So I'm guessing people who are holding on to energy stocks are hoping that the money will come back to it. Right? But really, we don't know when money will come back to energy. Going into the financials, as you know, have been beaten up pretty bad lately. We had a very large decline. We ended this decline with a Morningstar candlestick pattern, and actually this is probably one of the best looking candlestick reversals I've seen. Very textbook. Very large decline, gap down, small body, gap up, very large white body, and it happened on high volume. So this could possibly be capitulation kind of reversal sell-off. So it rallied and it's consolidating right now. You notice how we are basically stuck in this range. So what I'm getting out of this is that no one's brave enough yet to jump into the financials. All right, otherwise we see a breakout. And at the same time, I'm sure the bears are done beating this sector up. So that's why we're not exactly breaking down either. I'm gonna say we more or less hit a bottom, at least a pretty good bottom right here for financials around this area. Going into healthcare, we had a very nice rally. Looks very similar to the pharmaceuticals and biotechs. Nice rally, but now we're trading underneath the 20 and the 50-day moving average. Actually, what I want to do with healthcare is just to bring it back a little bit. It's still a daily view, but look where we are right now. Healthcare is basically stuck in this trading range within this entire year. And in mid-August, we basically hit the top of this range. And if this continues to side trend, we will probably come back down to 30 again. So not until it's able to break out above here will I be more bullish on healthcare. If it breaks down below 30, then I would definitely get out of healthcare, or at least look for bearish trades. Materials, very similar to energy. This is your chemicals and your fertilizers, such as moss, pot. So same thing, right? What was once working before is not working anymore. Notice how we are trading underneath the 50-day moving average. Okay. Now, will these stocks work? Yes, it's just a matter of time. We don't know when money will come back into the materials and energy, but right now it's not happening at this moment. Okay, next are utilities. Decline, rallied, touched the 50-day. Look at this, 4 straight days of ugliness. Okay, what's interesting is on Friday, this past Friday, the market managed to rally and close into the positive territory. At least we had a broad market rally. What happened to retail? I mean, not retail, utilities. We had a decline on utilities. Okay, that's actually very bearish. When the rest of the stocks are rallying and you're declining, it basically means that no one's loving utilities right now. Now, bringing it all the way back out to a 3-year weekly view, I want you guys to notice that we have created a classic reversal pattern. Can you guys spot it? So if you said a head and shoulder, then you deserve a nice pat on the back. We had a left shoulder here, a head, and then a right shoulder. And we had a very clear support or neckline right here. And guess what? We just broke its neck. Okay, this sector is basically dead right now. I will be completely out of utilities if I'm playing to the upside. But this makes for great short or bearish setups. And lastly, we have the home builders. Okay, this is the 3-year weekly. We notice how it's having a hard time breaking above the 50-week moving average. And guess where we are right now? Right at the 50-week moving average. If it's able to break above this level, especially above 24, then I would be a little more bullish on home builders. Let me bring it into a daily. Daily, you notice we had a little bit of rally, okay? But just notice how the pattern is. Notice how the pattern, it's a little bit choppy, right? So it's not exactly a strong rally. Remember when we saw with the consumer products, we had a very nice sharp rally and consolidation. That's what you want to see, not choppiness like this. Okay, it's not very comforting, I guess you can say. If you're bullish, to know that every time we hit a new high, we basically sell. We have a very large sell-off. But nonetheless, short term, we are in a slight uptrend. Okay, it is making a series of higher highs and higher lows, but I would much prefer seeing higher highs.